AI versus human investing. Who actually wins? And why? For decades, humans controlled the markets. Investors relied on instincts, emotions, experience, and gut feelings. But now, artificial intelligence is changing everything. I can analyze millions of data points in seconds. Humans take years to learn what AI can process instantly. So the real question isn't whether AI can invest better than humans, it's where each one wins and where each one fails. Let's start with AI. AI doesn't get emotional. It doesn't panic sell. It doesn't chase hype. It doesn't feel fear or greed. AI follows data, patterns, probabilities. It can scan entire markets, earnings reports, news, sentiment, interest rates, macro trends, and historical cycles all at once. This makes AI extremely powerful at high-frequency trading, arbitrage, risk management, portfolio optimization, identifying statistical patterns, removing emotional bias. That's why hedge funds, banks, and institutions rely heavily on algorithms. In fact, most trades in modern markets are already executed by machines. But here's where AI starts to lose. AI does not understand context the way humans do. It doesn't understand human psychology at a deep level. It doesn't feel shifts in sentiment before the data reflects it. AI reacts to information. Humans can anticipate it. I can tell you what has worked. Humans can imagine what could work. This is where human investors still dominate. Humans understand narratives. They understand long-term vision. They understand innovation before it shows up in spreadsheets. Think about early investors in Apple, Amazon, Tesla, Bitcoin. These weren't data-driven decisions at first. They were conviction-driven decisions. AI would have avoided these early investments because the data didn't yet support them. Humans saw the future before the numbers did. But humans have a massive weakness. Emotions. Fear makes people sell bottoms. Greed makes people buy tops. Ego makes people over. Impatience destroys compounding. Most human investors don't lose because of lack of intelligence. They lose because they can't control themselves. This is where AI wins again. AI is consistent. Humans are not. AI follows the system. Humans break their own rules. So who actually wins? The truth is uncomfortable for both sides. AI alone does not win. Humans alone do not win. The winner is humans who use AI correctly. The future of investing is not AI replacing humans. It's AI augmenting humans. The smartest investors today use AI to analyze data, spot trends, remove emotional bias, optimize portfolios, and then use human judgment too. Make final decisions, understand long-term vision, assess innovation, judge risk beyond numbers. AI handles execution. Humans handle direction. Think of AI as the engine. Humans are the driver. Without AI, humans are slow and emotional. Without humans, AI is blind to the future. Together, they become extremely powerful. In the next decade, investors who ignore AI will fall behind. But investors who blindly trust AI will also fail. The edge belongs to those who combine data discipline, patience, long-term thinking. AI will not make you rich overnight. Neither will human intuition alone. But if you use AI to remove mistakes and human judgment to make smart decisions, you give yourself a massive advantage. So who wins, AI or humans? The real answer is simple. The investor who knows how to use both.